Okay, I want to talk about a few things. So, the Fed just cut rates, which is another clear sign that they're trying to weaken the dollar. Further, they're trying to keep the markets propped up as much as possible, keep everybody happy in the short term, right? There's a little market dip. That's too much, right? So, you're going to try to keep everything together, as broken as it may seem. And that further bolsters any ideas that we have of increased continuation on these assets, namely equities, Bitcoin, crypto, etc., etc. Uh, so more and more, I'm starting to believe that we're going to get this extended cycle scenario, uh, particularly on Bitcoin, which likes to run in these 4 year cycles where it's 3 years up, 1 year down, 3 years up, 1 year down. And Bitcoin's currently in its third year. So many people are calling for the top right here. Rightfully so. It looks strikingly similar to what we have here in 2021. The only difference is that over here, quantitative easing started before the third year. Now, quantitative easing hasn't even begun yet. We're still in. The Fed is still has a the Fed still has a policy of quantitative tightening, though they're starting to reduce the interest rates, which means we're probably more like right here. Now, it doesn't mean I'm not saying that we're gonna get an asset price ballooning of fucking $5 million Bitcoin. I'm just making a case using liquidity cycles for why Bitcoin's probably going to keep moving higher. And so, and this is also in line with equities, stock market, gold, silver, just anything, anything that benefits from a dollar that is continuing to collapse. And so, what this means is that it's probably a safe bet to continue looking for longs and maybe disregard more of these uh, bearish scenarios that I have here on Bitcoin and the stock market, which has pretty much the same looking chart. So, for any of you guys that are playing stocks, I want you to also look at what I'm doing here on Bitcoin and kind of treat it the same because the charts look exactly the fucking same. It's just a parabolic run up due to a devaluation of the US dollar. It's the same fucking thing. So don't look at it as something different. So these bearish scenarios are becoming less and less likely, especially after the rate cut situation. Still, I'm not bullish. I don't think we're going to do this. I really don't think it's just going to go up crazy. So, what's going to happen? This is just a solid logical estimate on my end, but I'm going to be putting money where my mouth is. And so, this little run up right here that we've had for the past few months, after a massive rejection at all time highs, price went down crazy. And since this point right here, the Fed has been, the Fed has kind of been hinting at rate cuts happening. And so we've had this entire buy the rumor situation. Everybody thinking, oh shit, it's going to happen. It's going to happen. And so everybody's longing. And now price is moving down again. Price is kind of consolidating at a key resistance target here. So I think this is a very important reversal pivot. A decision must be made right here. And I think it's going to the downside. After the Fed finally cut rates, everybody's positioned beforehand because they were hinting at it, which means that there's nobody left to get in. And so, what do markets like doing? It likes putting people underwater, really testing your resolve. It always happens. And so, I expect a sharp pullback to the downside. Now, maybe it's not going to be like this. Maybe it's like that. Please excuse that. Maybe it's even deeper. We won't know until we get there. But nonetheless, I am expecting a pullback. And here's kind of the situation. I've been talking about this for a long time, where we're working towards this X wave or B wave. The way that I have it now is an X wave, and then at this reversal pivot, we get this move down to a maximum target, in my opinion, maximum target around 90 to 95K. I would prefer not to see that, but it doesn't matter. It really doesn't, because we're going to be longing levels of interest the whole way down, regardless, because there's money to be made even if you lose. So, this what this looks like for your alts is going to be horrendous, because we have Bitcoin dominance here appearing to have a completed three-wave structure, which means that what follows is a corrective move to the upside to around 62-63% dominance, which will absolutely rip apart your altcoin positions, and it is what it is. Now, it doesn't mean that you have to, cry and sell everything immediately, because it could just hit this minimum target of 60%, which makes sense. There's a unit bias there. People will probably be front running that 60%. And so maybe it corrects shortly before sweeping those levels. So we have these minimum targets here. And that would be the best case scenario. Then we get this sharp move down, another ABC to the downside, with minimum target being 54 for a pretty lackluster alt season, and then maximum target being around 47%, which is a face ripping alt season. So I do want to talk a little bit about the global liquidity, because global liquidity has been really ugly lately, except for just recently when we broke the highs. The highs were finally broken here, showing that the trend is continuing to the upside. Now, global liquidity is not a top signal. We learned that just recently, that it is not a good top signal. This trend continued to the upside and price did not follow it. But what global liquidity has always been good at is calling for general trend. You see sideways movement in global liquidity, you see sideways movement in price. You see trending movement in global liquidity, you see trending movement in price. It follows with quite solid correlation. It's pretty incredible. And so this is not an ultimate solution, but it is one that can be quite good at guiding you during these bull markets. Still, I think that for the most part covers the scenarios that we're looking for. I can talk about the price targets, and that's what I will do, because the price targets are quite interesting. So I'm going to go back to this my leverage trading chart to give you an idea of the price targets. Right here, I have the golden ratio multiplier, and let's go to logarithmic to take a look at it. Golden ratio multiplier is one of these. It's a very simple piece of on-chain data. I mean, it's not even on-chain data. It's just a moving average, and then you take with some standard deviations coming out of it. So the moving average is the 350, and all this does is it just multiplies it. This is a 1.6 golden ratio standard deviation away from the moving average, and then we have a 2x standard deviation away from it. And these, as you can see, have coincided with some very interesting tops on Bitcoin. We have that one at the 1.6, this one at the 2x standard deviation, and then the most recent all-time high, not the most recent, but the one, the prior one in January was at the 1.6. So reasonably so, and I've drawn some extrapolations here. You can expect it would be cool to see, right, this move down, and then we come up quite viciously and we tap it, boom, just like that. Nasty rejection at around 160, around 160, give or take. So that, I will say, that still feels, to me, it still feels like quite an ambitious price target, but it's not an unreasonable rejection area. And the Elliott wave theory gives us at least given the current structure that we have, the only other way to count it is that we're working towards a wave 3 to the upside, which means we get a corrective wave 4 and then a wave 5. I'll draw that out for you real quick. We have the 1 right here, the 2, the 3, the 4, and then the 5, which would be bananas. It frankly would be bananas, which means that we get this bounce off of this 1.6 standard deviation, and perhaps the wave 5 just stops right there, kind of like what it did right here. Because this is a 3, a 4, and a 5. If it's very shallow, then that would be the case. We get this a move up into the 3, reject really hard right there. Maybe it's just a shallow one, who knows? And then we go up and hit the standard deviation, the 1.6, one more time, and then that's it. Bull market's over. RIP. That's just based on the Elliott wave theory, and I have that drawn out right here on the longer term. You see that? Excuse me. And the funny thing is that that's part of an even larger impulse to the upside. Just because the way that I'm counting this is as an extended fifth wave to the upside. Because otherwise, it's pretty difficult to count. Nonetheless, this is kind of like the macro overview of what I think is going to happen. So nothing's really changed. I'm still bullish over the longer term. I think we're getting an extended cycle, at least until like early of next year, mid next year. Depends on how the economic data continues to progress. So in the next one, I'm going to share how I'm trading the current situation because I am in a lot of winning positions right now, and I think I'm only going to keep adding to it. So talk about that in the next one. These are starting to get kind of long.